Yo, what up, what up, what up? My bad, man. I had to do a little hard reset on the computer. I don't know what happened. Fucking technology is what it is. All bullshit. It'd be nice if we could just be more tribal. Hold on here, peoples. We're back in the game. We're back in the game. Let me get that man. I was just minding my own business, doing some scans, and the next thing you know, we're out. Good. Cool. Everybody ready to roll? That was some weird shit yesterday in the markets. I wouldn't say weird, the market's been acting like a little bit of a turd for a little bit, but still, the depth of dismay that we had. I bet there were a lot of bulls just puking in their turbans yesterday. All right, let's get this fucking party started. Let me share my screen. All right, cool. Let me make sure I get my bros in from the chat room. Yeah, we got a panic type of move happening so far. We'll see if some of this gap fills. Let's get into this. So first of all, let's talk about yesterday. So yesterday, the Honorable Uncle Jerome Powell came on. And you know what? It was interesting because he didn't say anything. He didn't say anything that he hasn't been saying this whole time. This whole time he's been saying, right, inflation. We may have to do a little bit more. We may have to do a little bit less. Data dependent, 12 months out. It's just a hodgepodge of nothing, right? And then, he's starting to chat. And before you know it, dude, it's like things got real juicy, real juicy. Yeah, I'm in a hotel room right now. It does have pillars. It's like an old, I don't know, like old, not castle, but old something. Yeah, it's an old something. So Uncle Jerome kind of came in and shit on the market. If the market had opened up a little bit normal, I would have been so gung-ho to take this, pig of a market down. But we are, opening at the lower Bollinger Band. It's going to be really difficult because we've had 1, 2, 3, 4. This is day 5 of a move. And so you can't, you don't want to short into the hole on a 1.5% gap down. So we're in a really tricky spot. So let's just go into this. So Uncle Jerome shit on the market. We had a big close yesterday. Now we've got this, right? And so it's a 1.5% gap down. Why is 1.5% gap down or 1.2% gap down so important? Well, the ATR in the market's 4.75, right? The ATR on the QQQs, you're at 4.44. So we've used up a whole day's ATR before the market is even open. So we have two things happening here. Number one is the short-term price action is dictating short. It's been very nasty, right? For really a handful of time here. But we've used up the ATR. And so what do? The short-term price action is too nasty to long, but we are too extended to short, right? Especially if you consider from here to here, this is the span of really just an hour or two, so we've got a couple different things going on. So I think today, probably some of this gap fills. If we flush up at the open, probably some of the gap fills at some point. And then we'll have to see if we can even fade off, because you can also see here, we're at the lower Bollinger Band and we are at 9 stochastics. As you can typically see, once you start breaking through the lower Bollinger Band, you get so stretched that, inevitably you start these kind of bounces. And so we're not completely as stretched as we were last time where the whole candle was outside it, but we're getting into, right? We're getting into these kind of, right, panicky territories where we were just recently, right? This was very panicky over here. So you can see here, you got maybe a quarter of it out. So we need, right, a little bit more. So ideally, if we can kind of get back into here, I think that sets us up for a little bit of a relief bounce. And then we'll see what's going on the other side of things, because if you see what's happening underneath the hood of the market is that, we've been bleeding off very steadily for a long period of time. So how you want to know if the market is bleeding off or not, right? You want to look at market breadth. Market breadth is a measure of, right, how much selling there's going on in the hood, underneath the hood of the market in relation to buying. And so there's a handful of things that we want to check, right? What's going on underneath the hood of the market? So first thing is we want to look at the percentage of stocks over the 200-day moving average. In TC 2000, you have these T indicators, right? So the T 1210107 is percentage of stocks above your 200-day. And then you can see your percent stocks over 40-day. We just count that as the 50-day for the most part. And then you can start to see you got the McClellans and all this other bullshit, but none of that stuff matters. Just the 07 and then the 07 and the 08. And some people use McClellan oscillators and shit like that, but not really my particular flavor. So you got 43% of stocks are over its 200-day moving average. That's not a good number. And you can see it's coming from like the 60s. So market breadth has been declining for quite some period of time. Then you have, right, percent of stocks over its 40-day PMA, you're at about 80, right? So a majority of stocks were really acting bullish. Now you're at 29. It takes a 20 to get an oversold reading. So if you look at like when big bounces start in the markets, usually you're going to get sub 20. So like if you think about when this bull market kind of started, right? If you look at the QQQs, right? I would say that a good portion of the good bull market kind of started in October for at least a lot of stocks, right? In October was when kind of like you saw NVIDIA start making its move, right? And you saw, right, Meta, right, start making its move, right? So you have some of these type of things that are going to go on. So when you start thinking about those things, now we want to kind of look in and say like, all right, we need to get kind of into these zones to get extreme oversolds. And even anything under 20, I think is considered a good spot. So you want to just kind of be mindful of these things. A couple other things that we want to see here, right? So you can see the number of 4% breakouts. You can see the number of 4% breakouts have been going. It's been going down steadily for a long period of time. And then you got the 4% breakouts really starting to push, right? So you want to be a little bit careful of this. We've got steady selling that's been happening nonstop for a long period of time. And we've got to be mindful. So just something to be mindful of over here. Hey, Dareway, how you doing, buddy? Declining 4% breakouts, increasing breakdowns. But see, we're not even increasing on the breakdown spot to a spot where you would get like panic selling. So like when you want to have meaningful market bottoms, when you start to see, like, see over here, when you started to like, get these kind of big spots, when you get under the 20, look at how much selling was going on. So this is like climactic selling, right? When you have so many breakouts happening, then you can have these bottoms made. So far, like as we've been going sideways, right? We have selling, but it's just like a slow bleed. And the thing with slow bleeds is that they can go for long periods of time. And so we've got to be super careful of where we're at, because we're not getting that kind of panic. We're not getting that kind of panic selling yet. So just something kind of to be mindful of as we start to go through this. Guillermo, what's going on? Corey, what's going on? Look at that. So let's go and let's see what's going on in the general thing. So we've got this shit box of a gap down, right? So first thing we want to do, we'll go through and see if there's any news plays, because one thing is that's been actually working really well is these news plays have been fading off pretty good. So we can, if we see any good gappers, we can actually try to take these bad boys down. So you got this Murphy Canyon, this thing's a turd, not enough volume. UPDT, That's a pump and dump stock. You know, that's probably, you can see here, right? It went from 33 down to 7. Not much you can do on that one. SPLK, this was a buyout, guys. SPLK was a buyout. Dun, 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 dun. Yeah, I can't do anything on this. Now look, UVXY. So UVXY is a measure of market breadth, right? Not market breadth, but volatility. So you can see like you got a little bit of a peak in UVXY here. I find that this just doesn't have enough range to trade anymore. It's been, you know, it's like a broken instrument for the most part. So you got to be a little bit careful on this one. It just, you know, back in the old days, like when you get these big spikes on this thing and it was like so tradable, you just don't get those anymore. I'd probably leave that alone. Bum, 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 bum. FNGD, junk, Yang. So this is China stocks, right? So this is kind of interesting over here. So you got possibly, it's a, and I'm drawing trend lines here, like I know what I'm doing, but right, you got maybe a little bit of a break that's coming in some of these China shorts. So let's take a look here. You got BABA, right? Breakdown between extended. PDD. Now, this is an interesting one. I actually think we should add PDD to the watch list as short. The reason is that in this market right now, fading breakouts, like hot breakout stocks that are up a lot, has been the play to do. So what I mean by that is, like, you know, we've been shorting the shit out of this CDNA. Like, see how like you peeked its head over here, right? And it started to roll over. This type of setup where you get like these hot setups, these hot stocks that are breaking out, right? And you start pushing through. Look at this tail on this bad boy, right? So you start fading off on this, and man, you're going to get this nasty, right? So you're getting all this because, you know, it looks like it's down so much, right? But this thing was like $1 back in the day. So now, like, okay, you retrace 20%, who cares? So I think like this PDD is at this key level here, right? This 90, 92-ish zone. And we know, like, off the bat too, right? Like, this is fucking, this type of setup has been fading now. And you can see, like, it's peaked out, it's starting to speed up. And now, like, you had first yesterday, like, you started the first hint of a speed up. Now, this today could be like that second hint of a speed up. It could be something that's pretty good. So we want to be a little bit mindful of this. I think that this could be something that gets this going. I like this. This is probably like, if you pop up a little bit here, right, and refill some of this gap, then start watching and seeing for rollovers, right? Start to see if you get lower highs, start to see how it reacts at the EMAs. What I mean by reacts around the EMAs is like, you know, like yesterday, see how like you gap down just like it is today? And then like, boom, you pop into the 9 EMA, pop into the 9 EMA, pop into, watch and see how it reacts around those EMAs. That'll give you an idea if you start to get right the speed up. I think that's like the setup that you want to use. And so let it pop up today and then watch for the rollover. And then on the other side of things, right, those grizzly fuckers put up a hit piece on it just about a week ago or so, right? The grizzly bear, grizzly cox, whatever their name is, you know, they put the hit piece out on this thing. We could get some good old-fashioned God-fearing Christian fun out of this. And it's a China name anyways. Like, we should always, you know, if you have a chance to short an American name or a name sponsored by Mao Zedong, you always short the China name first, right? We got to support our troops here. We can't be just, you know, always shorting, right? Always shorting Apple. Let's take down this bad boy, see what we got going on. We'll have some good God-fearing Christian fun. So add that, that's top of the list. Whoop. All right, cool. Now on the other thing, TMV, this is direction, bear, share. I don't know what this is. Not enough volume. SOX6, this is a semiconductor bear ETF. This is a base breakout formation here, right? So what SOX6 does is, right, it's just shorting like your, It's just shorting your NVIDIAs, right? AMDs, all this kind of stuff. You got a big base breakout setting up now. It's a little bit loose, but not crazy. This is going to be a key level on this bad boy. Let's do this one. You can add this one. I don't like trading the ETFs. I'd rather just I'd rather go to individual stocks, but like if that starts to speed up there, then you've got, right, AMD key breakdown here under 100, nice psychological level, right? The $100 rolls in reverse. And then you've got a bear flag that's been setting up here. You got room down to about 95 probably today. 95 today, like that's some good chatters right there. The thing is, we can't chase anything up at the open, right? Like you could see this NVIDIA's at, right? This NVIDIA's down 10 points. Like you can't chase this thing down. You got lower Bollinger Band. Dude, I'm thinking one spike. If we spike down hard at the open, we just lose it. Then we're going to have to try to long like off these old supports. We're going to have to long off these old supports if we get the spike down. Like if we start to pop up at the open on these, then, we start to fill the gap, then we've got to fade this bad boy. But like right off the gate, like if we just fucking boom, flush it, right? And then you use the ATR, then we do an ATR reversal, right? ATR reversal means what? ATR reversal means when you use up the ATR, right, and you start stretching it, you get into key spots, then you look for the reversal. So we'll look for a little ATR reversal if we spike off at the open. So this is a more dexterous. See, when you got a trending market like this right here, you're only really thinking longs, right? You're only thinking longs. You got trends. If you guys remember during this, like if the market dipped into bear flags became longs, right? Bear flags became longs. Like we used to make a running joke in the chat room, like a stock would dip down and start going sideways, and we'd be like, long the bear flag. Well, now the opposite is true. Now that the market is in this distribution over here, right? When you see the bull flags, right, you're essentially shorting them. So you're doing the opposite, right, of longing the bear flag. So if we get the pop up and we start to go sideways, then we'll try to roll this thing back. But I do think if we can flush off maybe another point or so, then we'll come in and try to do maybe some selective longs. This is the trickiest type of trading for those of you guys that are new or those of you guys that are struggling. I'd probably just stay out of the fucking market unless you really just have a good group of people that you're trading with or getting guided by and you can share ideas with. It's much easier to trade this type of market, right? It's much easier to trade this type of market. This is where you want to put the risk on. This is where you can hold overnight. This is where you can do all the fun stuff. In this type of market, even shorting is hard because the thing is the bleed is so slow that really like besides yesterday, maybe a little bit the day before, shorting has not been easy either because you're just bleeding too slow. So there are times to push your chips in and be really aggressive. And then there's times that you're just doing scalpy McGee's and you're trying to just make some income, right? And for those of you guys that can't make the income, the experience levels, then you're just trying to survive or you're just sitting and watching, right? Good. Let's go back into this here. Let's see if we got anything on the downside. Any earnings plays, any news plays, TVTX. That's nasty. All right. Now, this type of stock is a little bit hard to trade because you're down like 40%. Like there's really I hate it because the SSR will be on it. It just ends up being a bitch to trade. So leave that alone. This AVGR, watch and see if this thing pops up today. I think this is the day probably it fades off. They're going to dilute or have a pipe. They probably have a pipe down the road anyways. They're going to push this thing and dilute this thing. Like, let's see. I'd watch and see if it does a fake red to green. Probably today's the day that fades off. FNGU, that's your Fang Bangers. Fang Bangers look just like the overall market, right? That looks no different than the QQQs. Dude, I had this fucking thing, man, in my IRA at like $4. Bastards. Sold it for like 10%. Yin yang. So yin, this is the China bull ETF, right? Big breakdown. That's why I think this PDD, I think it can work because you got big breakdown in China. Dude, it's nasty out there. AVG market share. Google considers dropping Broadcom as AI chip supplier. Now that's nice. Is AI artificial chip supplier by 2021? It planned over the latter's price for chips known as to replace with Marvel. Ew. Marvel. Yes, you see a Marvel pop. I'd be shocked if that Marvel pop held. That's probably a fade off. So AVGO, yeah, AVGO probably can't afford to lose these tech companies like Google as suppliers. Let's add this. It's probably hard to trade. Yeah, I haven't made a trade in this thing in years, but let's add that to the list right now. I do think that you want to play. I do think you want to, if you can find some news plays, they're going to move on their own, independent to the market. Now, is losing Google potentially in 2027 worth 50 points? Probably not, right? So we'd have to see kind of how this plays out. But if you get a broader market, fade, then, it might actually have something. So we'll add that TMF. Oh, damn. This is your treasuries. You can see here, big breakdown on that. AI. You know what? AI is finally broke under the 200-day moving average. And you got a bear flag over here. Like, this has probably got a chance. Let's add that. We can't chase it down 5%, but let's see if we get a bleed off on that today. We should have held fucking a farm. Damn it. Damn. I think a firm to me is like a CVNA. Like, you get the big squeeze, it's a turd, right? We all know it's a turd, but in a hot market, these things hold for a little bit. Now you're starting to blow off here. You finally broke under the 9. If this loses the 20, dudes, you've got yourself some nice chatters there. Let's see how this reacts. You can't chase this down 5% either. So this is something you add to the list, but like, you can't chase any of these down. That's the problem. We got to have a bounce. Mara, big turd. You can fade this on bounce, of course. So, man, this is nasty out there. See, this is what I mean by fading the breakout. When the line drawers, right? When the line drawers are bragging, right? And they're drawing all their little lines and call that trading. When these things start to fade off, that's when you get the real fun here. Look at it, man. Fuck. Yeah. These are all nasty. Hey, Cisco, because they bought out Splunk, you're getting this kind of fade off. I don't know. These bio plays are a little bit tricky, so leave that alone. This one I like. Fuck Palantir. Anyways, this is a head and shoulders pattern. We call this the dreaded cock and balls pattern. All right. You got left shoulder, right shoulders, boom, trend line. Dudes, this fucking sick, right? Oh yeah. Bros, that's nice right there. That is nice. Let's add that. Once again, you can't chase this down either, right? 64 cent ATR, it's already used it. You got to let these things bounce, and you got to let them bounce hard, guys. If you're going to try to short, you got to let them bounce. I don't even know if we would try to do ORBs necessarily. They'd be tough. That's nice. Add it. So if we need bounces, guys, and I think we're going to need some bounces at some point. There's two spots that I want you guys, couple things I want you guys to start watching. Number one, if this IONQ breaks the lower Bollinger Band, so somewhere between 13.50 and 13, you got 1, 2, 3, 4, 5, 6, 7, 8 days in a row. We try to hit it. If it gets stretched to the point where the market needs to bounce, you got 1 stochastics on this thing, why not? Right? Yeah, I agree, Tarun, on that part. If we need to bounce something, set an alert on NVIDIA, 405. All right. That'll be a 2-tapper. You have a full $100 retracement. That's a buenos, right? I know these are a little bit more expensive. You probably have to do the calls on it. Whatever. Ooh, oh, man, these things are nasty. I think those are the two that you want to stick to. Man, look at this. If you guys need some cheaper names, right? Palantir, CCL for shorts, both of those will work. If you want, I know some of you guys, a little cheapy McGee's, nothing wrong with that. I'd go Palantir. I'd go NIO. You had an inside day yesterday. If it takes out, what day is it today? Tuesday's low. This NIO's got a bear flag. Remember, China stocks are weak too, right? So you got gap down on the offering, inside day. Dude, that's a buenos. That's Spanish for good. I like. Good. Yeah, we do NIO, PDD on the Chinese side. So you get NIO, PDD for short, AMD for short, on pops only. On pops only, I repeat, on pops only. And then I think we even add a Google, you know, on the failed breakout setup. These failed breakout setups are very juicy. Google, Affirm, failed breakout setups. If we get the pops, you know, I don't know if we do or not, but it's nasty. Look, like Amazon, this is why I don't even think the 50-day moving averages hold. Like, see, Amazon always bounces off the 50. It bounced off the 50, and then yesterday it just prima some young guy that all over. Yes, a nasty. This one's also a bear flag, man. This one's got a lot of room to fall. So you got SMCI, Palantir. These are very clean. AMD, clean. CCL, clean. If you need a little cheaper, then we got the high flyers, PDD, Affirm. Those are the tops, all right? If we need bounces, we go Tesla, 255, possibly, because you got the gap fill here. Now, I'd be shocked if that really holds, you know, the way the distribution's coming in. But let's see, if we kind of thrust under, we might get stretched a little bit. I think NVIDIA is probably the easier bouncer off the 405. All right, let's make our 6 windows. We got the NVIDIAs, we got the Teslas. And guys, watch the price of oil too. The price of oil is adding a lot of pressure to the overall markets, and it's been acting as a no buenos. Dude, CVNA's a tear. We were short, and I held that shit all day yesterday to take it down. Yeah, coins a bear flag too. I mean, they all are the same. You don't have to really watch that many stocks today, guys, because like everything is going to move in unison. mRNA breakdown, CCL, everything's going to move in unison. And of course, you can just trade the general indexes too. That's the list. I'm sticking to it. Anybody got any questions? Let me see, Toby. Do you prefer Tobias or Toby? Toby was the best character on the West Wing. Wasn't he not? Was he not? Was he not? For America, people, today we got to do the Lord's work in the devil's playground. Today we got to do the Lord's work in the devil's playground. Let me just recap here. The market's at the lower Bollinger Band. You got a 10 stochastics. If the ATR is used up, we're at 4. We're at 4.5, 4.75. If the ATR gets used up, we flush down at the open. We're going to look for quick longs, counter trend longs. If we fill the gap, we roll into the EMAs, or you can use Levi's Fibonacci's. You know, I usually wait till he posts them all in the market updates. There's good note. I would use his pre-market notes because he always has the fibs going. I use his, they work like a charm. I mean, I used them on a couple stocks yesterday that we were trading, but the fibs work on the bounces. So he's always got these things ready to go. So if you start getting into these zones that he watches, they work almost every time. But dude, he was hot to fucking trot yesterday. 40%, 14%, 40%, 30%, 19%, 27%. That's a hot run for a man. That's how you double up, triple up your accounts. Look at this shit. That's good God-fearing Christian fun right there. Yeah, it's just a man on fire, as we'd call it. All right, guys, let's go do the Lord's work. Let's go do the Lord's work. Guys, this is not the time to get fucking rich, right? This is a scalpy McGee market. Be safe, capital preservation, all that bullshit. Now, obviously, if you know what you're doing, then it's, you know, it's time to go commando. I ain't wearing underwear today. Let's do this. I ain't wearing any underwear today. Let's go do what we do, people. Let's go do what we do.